on halftime report. It's halfway through the trading session and there's only the Adani Group stocks that one has to be speaking of. And that's primarily because the way the frontline indices are moving, both the Nifty as well as the Sensex, are intertwined with the way the Adani Group stocks are moving. Just pull up the intraday chart of the Adani Ent stock. For instance, it at one point was down around 35%, has recovered from there. And that move coincides with the way that we've seen the frontline indices move as well. So sentiment continues to remain glued to what happens to that group. And the mid-cap index is facing a fair amount of weakness. 4 stocks lower for every stock that's advancing. It's underperforming. I mean, no one's looking at the frontline index right now.
Absolutely, Mangalam. Well, it is only about a set of stocks which have really dominated sentiment. And at this point in time, the market really is wondering what the collateral damage could be with regards to the wealth destruction that you've seen with the Adani group of stocks. That is something that we will be discussing over the next 1 hour. But as of now, let's kick off the show with Ujjivan Small Finance Bank. They reported what was a good set of Q3 numbers. The stress has been reduced in terms of asset quality on a Q-on-Q basis. We have with us Mr. Davis, who's the MD and CEO of Ujjivan Small Finance Bank. Thank you, sir, for joining into this conversation. If you could just start by, in fact, talking about the asset quality, where the stress has reduced on a Q-on-Q basis. In fact, your gross NPA ratio has come in at around 3.64% versus 5.06%. Can you tell us whether you are probably going to see this kind of asset quality going into Q4 as well as in FY24?
Hi, good afternoon. It's good to be with CNBC. Yeah, I think, we have seen the credit quality improving post-COVID on a quarter-to-quarter basis. And that is something that we believe will continue in the fourth quarter, as well as to the next financial year. I'm assuming that the economy and the rest of everything, the recovery continues. So when that is happening, this is going to continue. We will see further reduction in the GNPA from the current levels gradually. And things should stabilize. Our, bad loan portfolio or the NPAs should start coming down towards the pre-COVID levels as we get into the next financial year.
All right. If you could quantify that level, Mr. Davis, and at the same time, what the street is really worried about is this consistent 150, 160 crore sort of write-off that you've been doing over the last 8 quarters. In fact, cumulative write-off of almost 1,260 odd crores. Is there no effort made for recovery? Just trying to understand if there's a way you can reduce the write-off amount per quarter. How much of your restructured book can actually turn bad or, be needed to be written off?
No, the restructured book is actually doing quite well. So, recoveries from that has been above the general market levels. But the write-off is based upon, where loans have not been performing for 6 months or more. We have a set criteria and we apply that, and then that's the basis of the write-off. Now, having said that, we are seeing recoveries from the written off loans. It's not that we write them off and forget about them. We are very much pursuing these. And this year, so far, about 90 crores has been collected from these loans. So, and we expect to end the year with about 120 to 125 or thereabouts. And that will continue. Now, obviously, as it gets longer stretched, it's going to get more difficult to collect. So we expect some further collection in the next financial year. But after that, it's going to get difficult. But I think overall, a 10% recovery on these loans is a good number.
And the GNPA, you said, would stabilize at what?
GNPA will continue to come down by a percentage or 2 in the next couple of quarters. And thereafter, it should stabilize at those levels. Okay.
All right. Well, you seem to be quite confident in terms of asset quality. I just wanted to touch upon your disbursements. One of your strongest points in terms of disbursements has been MFI. That's in fact constitutes a large part of your book. Can you just tell us what it would be in terms of incremental disbursements going into Q4 as well as FY24? Would MFI still be dominant? And would the bank look to diversify in terms of disbursements as well?
Yeah, that's a good question because, the MFI book has come back faster than the other books post-COVID. And I think that is the segment which is more able to come back, and that's what we did. So in fact, you're right when you say that the bulk of the disbursement is there. We started the financial year with about 67-68% of our book in microbanking. That has gone up a little bit towards 71%. It may go up 1 or 2 more percent before the end of the year, end of this financial year. But in the next financial year, we are going to be seeing the secured parts of our business growing a little faster. And then the turnaround will come. And our plan, as we have said before, and which we stick to, is over a period of the next 4 to 5 years to bring the secured and unsecured book on a balanced 50-50 basis. So the housing, the affordable housing, the micro and small enterprises, the gold loan, and the vehicle finance businesses will grow much faster in the next financial year and beyond. And through that process, we'll become more stable in terms of a 50-50 mix between secured and unsecured. That is our eventual objective.
Okay. So, I just had a larger question. Going into FY24, brokerages have said that FY23 could actually be one of the best years in terms of performance for you all, a bumper quarter. But going into FY24, do you think this performance that you are seeing in FY23 is in fact sustainable?
No, that is what you need to look at is the pre-provision operating profit, because the provisions and the recoveries below that have helped us. But if you look at the PPOP, I think we will be seeing some good traction. We have built the business. The volumes are good. The net interest margins are also good, although down a little bit this quarter. But, we are all set to see another good year in 2024.
Right. And the owners will be the same of the company, right? Because there was word that maybe you guys are looking for some larger buyers, etc. Is that correct?
I'm not sure where that story came from, but all I can say is that we are in the process of a reverse merger. The holding company will be merged into the bank.
Yes.
We recently got the RBI approval. We are waiting for SEBI approval, and then we move to the NCLT. And once that happens, the shareholders of the holding company will become shareholders of the bank. But beyond that, I don't have any other information or any other knowledge of any other things which are going on.
When will the reverse merger be completed? When do you expect the approvals to come through by?
We are targeting and we are hoping that it will be completed by September. So the second quarter of the next financial year.
All right, take that point. Thanks a lot, Mr. Davis, for joining in, giving us those views. As far as the business is concerned going forward, we will await the reverse merger in September itself. Take a short break, come back, we'll get chatting with Sunil D'Souza, who's the MD and CEO of Tata Consumer Products. The stock at the low point of trade. The conversation comes ahead of their conference call.